Let's go on to Curriculum Corner. Welcome back to Curriculum Corner, my favorite segment of the week. This is where we pull golden nuggets from books of all sorts to level up our decision making in the markets. Today, we're diving deeper into Daniel Kahneman's Thinking Fast and Slow, with two interconnected quotes that hit right at the heart of why trading psychology is everything. The first quote, why are experts inferior to algorithms? And the second, we know from studies of priming that unnoticed stimuli in our environment have a substantial influence on our thoughts and actions. These influences fluctuate from moment to moment. So, starting with the big one, why are experts inferior to algorithms? Kahneman, a Nobel Prize winner in economics, isn't dissing human expertise. He's exposing its vulnerabilities. Our brains operate on two systems. System 1, a fast, intuitive, a gut-driven system, and System 2, a slow, analytical, and logical cognitive system. Experts build amazing intuitions through experience, but our System 1 is prone to biases like overconfidence, anchoring bias, or confirmation bias. Algorithms? They're pure System 2 machines, consistent, emotionless, and immune to mental shortcuts. Studies Kahneman references show algorithms outperforming experts in fields from medicine to stock forecasting because humans inject noise. In other words, inconsistent stimuli in our environment have substantial influence on our thoughts and actions. These influences fluctuate from moment to moment. A classic example from the book is a smile and frown study. Participants were asked to rate the funniness of cartoons while holding a pencil in their mouth. If they held it between their teeth, it forced their facial muscles into a smile-like position and boom, the cartoon seemed funny. If they held it pursed between their lips, mimicking a frown, the same cartoons bombed. The key? They had no idea their facial posture was influencing their judgments. It was an unnoticed stimuli, priming their emotional response. Now let's tie this to the first quote. Experts are human. They are constantly bombarded by priming effects and add even more noise to their expertise. Algorithms don't smile or frown. They don't get primed by a bad headline, a noisy trading floor, or even the weather outside. In trading, imagine this. You're an expert technical analysis, spotting a breakout pattern. If you just scrolled through a bearish Twitter doom scrolling priming your System 1, you might frown internally and second guess the buy signal, overriding your system, your trading system. Or after a winning streak that primes overconfidence, you ignore risk management. These fluctuations happen moment to moment. 1 minute you're primed by green market open to go aggressive, the next by a random email stressing you out, leading to a hasty sell. Now, what are some real-world investing parallels? Look how news tickers or social media prime retail traders during volatility. Studies show traders exposed to positive priming take more risks, while negative cues make them overly cautious, fluctuating influences that algorithms ignore. Remember, let me pull this up. Remember the GameStop saga? Primed by Reddit hype? Experts and amateurs alike piled in. Kahneman notes how recent events make experts overweigh short-term noise over long-term trends. How about Buffett's index fund? It won because passive algorithms aren't primed by market euphoria or panic, they just execute. The hybrid fix Kahneman implies is to use algorithms to strip out human noise and priming vulnerabilities. In your setup, code a simple algo for entries and exits based on whatever indicator you like. These are just data points. That's all indicators are. I like the 10, the 20, and the 50-day moving averages for short term and the 200-day moving average for long term. It won't care if you're frowning from a bad coffee. Now, just apply your oversight for quantifiable stuff like macro shifts, and always check in. Is this decision primed by something unnoticed? The takeaway. Markets are a priming minefield of headlines. Chat rooms, even your desk setup can fluctuate your judgments and make you inferior to a consistent algo. Read Thinking Fast and Slow to spot these traps. Next time you're about to trade, pause. Smile or frown. Primed or objective. What about you? Ever made a trade swayed by unnoticed vibes? Share below and we'll discuss it. Otherwise, that is the end of Curriculum Corner, and back to the charts. Let me close those notes, pull these up.